Now, what is particularly interesting about this paper, March-June 2026 SBR paper, is that question 2 of this paper completely focuses on sustainability. Now, as we know that SBR is going to become BSR from September 2027. And once it becomes BSR, there'll be one question that will fully focus on sustainability related issues. And this particular paper gives us insight into how the future business reporting papers are going to look like by bringing a complete focus on one question into sustainability. And to understand and answer this question properly, you will need to have a complete understanding of IFRS S1 and S2. What goes in to each of these standard, what are the required disclosures. Only once you know that entirely, you will be able to respond to this question. Now, question 2 usually focuses on ethical issues, and there is a financial implication, right? That's how the usual past papers are. But in this particular paper, both the implication as well as ethical issues are focusing on sustainability matters. All right. So once we read it, we need to recall all that is to do with IFRS S1 and S2, but particular knowledge being brought in that can be applied into the scenario. That is key. All right. And as I always say, when you're reading a question, you start by reading the background, then you move into requirement, and then you come into the exhibits. You don't start reading exhibits and then go to requirement. Go to requirement, understand what the requirement is, and then you move into exhibits. All right. Okay. So let's start reading this question. Hicks Co, this focusing on Hicks Co, is an international cruise line which operates cruise holidays. It prepares its sustainability report using IFRS Sustainability Disclosure Standards. Now, this is key. When this is brought in or when this is mentioned, you need to quickly think about IFRS S1 and IFRS S2, as these are the two standards pertaining to sustainability released by IFRS. Okay. It has a reporting year end of 31st December 20x5, right? They've given reporting year end as well. So reporting year end, why it's important? Because sustainability related disclosures that are compliant to IFRS S1, S2 need to follow the same reporting period as the financial performance or financial reports are following. All right. So the following exhibits provide information relevant to the question. We have first exhibit focusing on disclosure. Second exhibit, email from CSO, Chief Sustainability Officer. Disclosure provides the draft greenhouse gas emissions disclosure from Hicks draft sustainability report. When we read this, we understand, okay, this is going to focus on IFRS S2 climate-related disclosures. We quickly have to also recall that greenhouse gas emissions, you need to disclose the gross emissions from scope 1, 2, and 3. Right? Okay. Now let's move into the requirement. Requirement is for 20 marks. Candidates are advised to attempt these requirements in order. Now this is what you are being asked to do. So as I always tell you all, make sure you respond to what you are required. You respond to what the examiner is asking you to. Okay. Now examiner is asking you to attempt the requirements in order. So you need to attempt A first and then B. Don't go to attempt B and come to A, because examiner is asking you to do that. That's a good discipline that you can follow. All right. A. Using Exhibit 1, evaluate whether the draft disclosure complies with the requirements of IFRS S2. There you go. Climate-related disclosures in respect of disclosing greenhouse gas emissions, metrics, and targets. Evaluate. Evaluation meaning you need to bring both the goods and the areas that are not compliant. Good meaning compliant and non-compliant. All right. Okay. Now, when you look at IFRS S1 and S2, what comes into your head is the four lenses, right? You have governance lens, you have strategy lens, you have risk management lens, and then you have metrics and targets lens. All right. Now they want you to focus on greenhouse gas emissions, right? Particularly from metrics and targets perspective. All right. Now, if you go and talk about who is responsible, how the governance is, who is overlooking the climate related issues, climate related sustainability factors are taken in or not, or strategy, how is strategy aligned into the main business activity of climate related disclosure, or risk management, this climate related risks and opportunities, right? What are the risks, what are the opportunities, what are the mitigation factors? No, you're not supposed to speak about all of that, right? That's dumping knowledge. You can bring knowledge, may have all the disclosure knowledge, but you're not supposed to dump it, you're supposed to apply it. So you're supposed to bring the knowledge that can be applied. In this case, limit it. They're asking you to limit it to greenhouse gas emissions metrics and targets. So limit it to this. Disclosures relevant to this. Right? So when we talk about metrics and targets, what are the general disclosures that you can think about? What are general disclosures that you can think about? Yeah. Now, general disclosures, still we have not read the exhibit, but we are trying to recall, we're trying to understand what are the general uh, disclosure requirements, and then we'll see how that is going to be applicable to the exhibits provided. Okay. So the general disclosure requirement says for each target, right, first you have to bring in the metric used to measure the target. Okay. And then you are supposed to disclose the objective of each target, right? Objective of each target that you have set. And then you also are supposed to talk about the section of the entity covered. See, I'm just limiting it to metrics and targets lens only. Okay. I'm not talking about governance, general strategy, but yes, targets and metrics related governance, we will talk about that as well. The section of the entity covered, and then period covered. These are all the disclosure requirement outlined by IFRS S2, right? Period covered, and then the base year or base period. So you have to, when you're reading the exhibit, you have to look for these information. Okay, base year or base period, and then you have to think about the governance factor, governance of metrics and targets, right? Governance of metrics and targets. So under this, you will be focusing on who, or before who, how is target set, who sets, who monitors, who reviews, right? You have to think from the governance aspect or pertaining to metrics and targets. Okay, right? That's governance. And then we also think about the interim targets and milestones, right? Any interim targets or milestones, you have to talk about that. All right. And then you have to speak about whether the target is absolute or is it intensity based, right? Absolute meaning numbers. Intensity based meaning in percentages. No absolute number there, right? Then you also have to disclose any external or any international agreement that you are following as an entity, right? So assume that you are Hicks, all right. And then you also have to, when there is carbon footprint, there is a concept of carbon offsetting, right? Where in the practical real world, there is something called carbon credits, right? Carbon offsetting. You have to disclose about carbon offsetting or carbon credits. Now, what are these? As I've already explained, carbon credits are the credits or the forms of refunds or forms of allowances that you are getting pertaining to the pollution that you're creating, sustainability issue that you are creating. Now, let's say government has provided 10,000 metric ton per company. Right now, that is the carbon footprint that you can have. Right, 10,000 metric tons. All right, let's assume. Now, when you are given 10,000 metric tons, let's say you've used only 8,000 metric tons, meaning the impact that you've created is only 8,000 metric tons of carbon footprint. But a competitor in your same industry is having 12,000 metric tons or 14,000 metric tons, right? So when it's 12,000, they are above the target that the government has set by 2,000. You are below the target by 8,000. Now that competitor can purchase the carbons from you, right? So carbon credit. So they can pay you and purchase that 2,000 that you have remaining, right? So that's what carbon offsetting or carbon credits are. Okay, right. Then you are supposed to disclose the actual performance, right? Actual performance in terms of interim targets and in terms of actual target. All right. So these are the main areas that you need to speak about. And remember, IFRS S2 requires you to talk about the gross emissions, GHG emissions, right? And then you have to disclose scope 1, scope 2, and scope 3 emissions. All right. So you have to disclose what your scope 1 emissions are, scope 2 and scope 3. Scope 1 are the ones that you can directly control, right? The pollution that you're creating that you can directly control. Scope 2, you cannot directly control, but you can avoid being a part of it, right? Let's say electricity. You can't control how much electricity is being used generally, but you can avoid using electricity. You can come up with solar power energy, right? Then scope 3, meaning all the stakeholders that you are dealing with, the carbon footprint of them, right? The emissions of them. That is scope 3 emissions. All right. Okay, so when we are reading now, when we go and read the exhibit, we have an understanding what needs to be there, and then now we can compare against that whether this has been achieved or has it not been achieved. Okay, so in that way we can evaluate what are compliant, what are non-compliant, then we can provide an overview. All right. Okay, so let's start reading the exhibit. The following is a draft greenhouse gas emissions disclosure from Hicks Sustainability Report, greenhouse gas emissions in terms of metrics. So here they're talking about metrics. But remember, reporting period has been brought in already, right? Now metrics. Cruise lines generate greenhouse gas emissions mainly from the combustion of diesel in ship engines. Okay, now this is the main section of the company that is polluting or that is creating carbon emissions, right? All the significant levels of emissions are also associated with a value chain. A value chain is where scope 2 and scope 3 are resting, right? Hicks total greenhouse gas emission levels expressed as metric tons of carbon dioxide equivalent are provided below. Now here this is the metric that they have provided. So metric is also provided. Good, right? Section provided, metric provided, reporting period provided. So far we get an understanding. Okay. 20x5, 20x4, they've done a comparison. Total gross emissions. So this is total gross emissions. Scope 1 net emissions, Scope 2 net emissions, Scope 3 net emissions, and total net emissions also has been provided, right? Total gross emissions 16.1 in 20x4 becomes 15.6. Net emissions 12.9 becomes 12.3. Everything that we see has gone down from previous year, meaning ABC improvement there. But are they talking about base period? Which is a base period? So base period is the period against which you're going to test or against which you're going to compare, right? Scope 3 emissions associated with the purchased goods and services and waste generated in operations categories have fallen significantly in the year ended 31st December 20x4. Fallen significantly, right? How much? Quite vague there. This is because of company-wide policy to source food from suppliers which have initiatives in place to reduce emissions and food waste. Source from suppliers that are going to reduce emissions and food waste, meaning scope 3 emission reduction. Okay, right. So that's metric. So base period still remains a question. Targets and performance today. Hicks is committed to net zero by 2050 in accordance with the Paris Agreement. Now we see there's an international agreement that they are disclosing here. To help achieve this, it has set the following targets. Target 1, a reduction in total net greenhouse gases by 25%. So we see that it is intensity based 25%, right? And it is net. Now we know it's net, so we will be able to convert it to gross. Clear, fine. Target 2, reduction in scope 3 emissions associated with food procurement and food waste by 30%. A reduction by 30%. Now, is it net or gross? Not very clear, right? That's a question that we have to evaluate. To date, we have achieved a reduction in total net greenhouse gases of 8%, and we are making excellent progress in reducing scope 3 emissions related to food procurement and food waste. Now, this is very specific, meaning actuals. Here they're talking about actuals, right? Actuals, 8% specifically, they are giving that amount, right? But the target 2, excellent progress, isn't that vague? Isn't that vague? That is vague. And here they have not even provided whether it's net or gross. Target 2 is problematic. Okay, we can identify that. Okay. Although fossil fuels are at present the only viable fuel option for the cruise industry and the only type of fuel which Hicks uses, we are leading the way in moving towards alternative fuels. We are in partnership with key organizations to identify new technologies, including biofuels and hydrogen, and we have seen some great success in this area. Right, now that's another red flag. Why is a red flag? Because IFRS S2, there are 4 sections, 4 lenses: governance, strategy, risk management, metrics, and targets. Risk management is where this part belongs. But they have included that under metrics and targets. Problem. Although they have disclosed, but they have disclosed in a wrong place. So the disclosure needs to happen in the correct place. So that's also one thing that we've identified. Right. So what are the issues we've identified? We've identified, okay, interim targets. Have they given any interim targets or milestones? Not disclosed, right? Not disclosed. Although S2 requires to disclose, they've not disclosed it. Now let's go back and look at whatever we have took down. Whatever we've taken down. So metric used to measure, good. That's there. Right. Whatever is good. Let's mark it using black. Right. Good. Objective of the target. Target 1. So there are 2 targets. Target 1, target 2. Target 1, yes. Net house gas emission reduction by 25%. Good. Right. Section of the entity covered, combustion. Right. It's a combustion engine based. Period covered, yes. That's also provided. 31st December 20x5. Base year. Question. Target 2. Question. Governance of metrics and targets. How is target set? Who sets? Who monitors? Who reviews? This entire section is unclear. There is no mention about how the governance of targets and metrics is happening. How is target set? Who sets? Who monitors? Who reviews? No idea. Not disclosed, right? Then interim targets and milestones missing. Absolute or intense, we can conclude that is intensity based. That's there, so it's good, right? But from target one, target two perspective, target one is good. Target two is questionable. Why? Because we don't know, although we know it's intensity based, but we don't know whether it's net or gross, right? International agreement, yes, international agreement, Paris agreement, they're talking about that. Carbon offsetting, carbon credit is not relevant, right? It's not required. They've not disclosed anything there. But even if they're not disclosed, it is not making much of a difference, right? But if you want, you can just make a note that carbon offsetting or carbon credits is not mentioned or not disclosed. You can just mention one line there. Actual performance, right? Actual performance against actual target. For target one, yes. For target two, no. Very vague. Specific, 8%. Very vague. Why? They're saying excellent. All right. Interim targets, no, not provided. Then scope 1, scope 2, scope 3 emissions that they are providing very clearly. This is a good job done from this perspective. Right. Then we also have noticed that there is irrelevant disclosure belonging to a different section. Right. So we're making a note of that as well. So when you are responding to this question, you have to talk about from both the perspectives, what is compliant, what is not compliant, and whatever we have highlighted, you are going to talk about it. So it's a 10 marks question. So you bring in 10 good points, right? Comparing against the disclosure requirement, whether compliant or not, and then you can give a small conclusion saying, although there are some that are compliant, there are some that are not compliant. Therefore, there should be a complete compliance that needs to be achieved from IFRS S2's disclosure perspective if it is being followed, right? Okay. So we identified whatever the issue. So now you can structure your answer, right? That's one point you can talk about one. So let's first look at how many points you can speak about from non-disclosure perspective. This is 1, 2, 3, 4, 5. So target 2, you can take it as 1, right? And you can discuss how the net or gross is vague. Yeah. So objective is vague. Net or gross, you're not sure. And then intensity, although it's specific, but vague interspecificity makes it still vague. All right. Then how many points did we cover? 1, 2, 3, 4, and 5, right? Then we have the actual performance, interim targets, that's 6th issue. And actual target from target 2 perspective, it's vague again, so that you can speak about from the previous point itself. You can continue with that, right? And then you're speaking about another issue, which is irrelevant disclosure. So issues itself, we have been able to identify about 6 or 7, right? And you identify 3 areas that are good or compliant, and then you can give a conclusion. So that actually gets you 10 marks, right? So what is necessary? Bringing knowledge that can be applied to the scenario. That is what is key. All right. Although you might have knowledge, you might know what to be disclosed, what not to be disclosed, but you need to be in a position to limit yourself to bring the knowledge that can be applied to the scenario. So you read the scenario, read the exhibit, and talk about or bring the knowledge that can be applied to the exhibit. That is visible within the exhibit. You only talk about those areas as we just went through. Okay. But to answer a sustainability related question, you need to know IFRS S1, S2 holistically. S2, there are physical risks, there are transition risks from risk management perspective, right? So that also you need to disclose. And then the governance, who is responsible, who is in charge, right, to manage climate related disclosures. Then the strategy, how is it becoming a part of the company? Then the risk management, the climate related risks and opportunities, right? The entire governance perspective of that as well, right? And then metrics and targets. So in this particular question, you had to focus on metrics and targets, but you may get a question that focuses on maybe a different lens, maybe risk management lens. So you should be able to limit yourself within risk management lens and talk about all the disclosures required by IFRS S1 or S2 pertaining to that area. Okay, so that's what is important. So that's how you read the question, read the exhibits, and plan your answer. And once the answer is planned, you can draft it. All right, so you put pointers, meaning when you're planning your answer, and you can expand those pointers later on. Okay, so as I have told you, the purpose of these sessions are not to draft an answer for you, but to give you an understanding of how to read a question and how to pick required information, how to plug the required knowledge that can be applied, and how to apply that knowledge into the information that has been picked from the scenario. All right, so that is the response to requirement A. Right, you can draft requirement A entirely. And then moving on to requirement B.